What's up, everybody? Michael and Coco here. You're watching episode 26 of the Weekly Scan.
The Weekly Scan.
In episode 26, we're going to be using technical analysis to review 8 different stocks. We're going to be going over support, resistance, patterns, and ultimately a trade plan. All of these stocks were found on my Bouncy Ball scan, a scan that I will be releasing to all of you here very soon. And as for a quick disclaimer, these videos are for entertainment and educational purposes only. If you do not have experience in the stock market, I would highly suggest starting off by paper trading. Now, if you're unfamiliar how to begin paper trading, there's a link in the description below to Webull, the brokerage that I personally use. If you sign up using that link, you're gonna get 2 free stocks if you do deposit $100, and me and Coco are gonna receive 1 as well. But in order to paper trade, you do not need to deposit anything. It is free software. With all that said, let's go ahead and get into today's episode. Yeah. All right, welcome to the computer. We're now going to go over the 8 different stocks that are on my watch list. All these stocks were found using my Bouncy Ball scan. Very simple scan, and I'm putting together a video to teach you how to do it as well. We're going to be mapping out some supports, resistance, talking about some patterns, and trade plans around these 8 stocks. So without further ado, let's just go ahead and hop right into it. The very first one is ticker symbol EQT. Now, what do we got going on here? Well, first, let's go ahead and talk about the context of the chart. Okay, context of the chart is kind of really going sideways, but overall bullish. What do I mean? Well, we have the 50 period above the 200 period moving average, a nice spread between the two. So that's a good sign. However, they're not really sloping up. They are slightly, but they're kind of just going sideways. Now, I say it's more bullish context because we had a run up here, consolidated, and then we're seeing another run up, and now we're seeing more consolidation take place. So my question is, hey, is this consolidation eventually going to break out again? So let's go ahead and plan a trade around that. So what do I see happening right here? Well, I see somewhat of a falling wedge. As you can see, this trend line, it looks like it's struggling to break above it. And however, it's holding this trend line right here. So you can see the wedge coiling tighter and getting tighter and slightly heading downward. So this is the falling wedge, which is a bullish type pattern. You'll see this throughout a lot of these stocks. So how would I go about playing this specific stock? Well, you can do what's called a speculation trade where you can enter in shares right around here and have a stop loss below the trend line and then eventually hope that the price breaks out to the upside. Another way you can do it is wait for a breakout on a high volume that goes above this trend line, and then we might see the continuation to the upside. As far as target goes, $18 looks like a solid target for this falling wedge pattern. Clearly, that's where it kind of topped off right here on this candle. So if we get it from $16 to $18, that's a $2 per share move. Nice gain right there. So we have a bullish pattern, we have bullish context, we have history of it consolidating and breaking out. So this overall looks really strong. The indicator of the RSI up here is not giving us much. It's kind of just sitting around 50. It's not overbought, oversold. And then we have the MACD that crossed over, and it is technically above 0, but it is kind of bearish looking. So keep an eye on that one. It would be nice to see this start curling over like that and start heading higher like so. If it does that, that would really represent a breakout right here if we got the volume to match it. So how would I go about trading this? Like I said, if you want to be a momentum trader, you'd want to wait for a breakout of this with high volume, and you want it to close above there too. Or you can speculate. I speculate quite often where I just like the pattern and I'll buy in low and I'll have a stop loss at a certain point. A stop loss would probably make sense right around this 1475, 1450 range. There's a lot of different price points that it had resistance at before. So as you can see, it kind of formed a very similar type of rising wedge pattern right here. Boom, and then when it broke out, it got rejected right from that range, which would be similar if it does break out here and then gets rejected at that range as well. So there's a lot of lines on my chart, but overall, nice little pattern setup. Hold a tight stop loss, and this would be a good speculation trade. I would want to get shares, like I said, a little bit lower. Around 1550 would make more sense to me. And then a stop loss below the trend line. Let's move on to the next one. Here is ticker symbol KGC. Let's go ahead and talk about the context. This context to me is a little bit more bullish than the last one. Why is that? Well, we have the 50 sloping a little bit steeper up, and we have the 200 sloping a little steeper up. Both have a good spread, some bullish context. It's been pulling down recently, which is a nice thing because that gives us the opportunity to buy in shares for cheaper price. So if it does continue to move up, we're getting shares on a pullback. Now the 50 period moving average acted as resistance here, and it kind of acted as a support previously, and now we're seeing somewhat of a bounce from it. This candle candle right there was a nice little hammer candle. It's kind of bouncing from that point. And the pattern, once again, is somewhat of a falling wedge. As you can see here, we're having this trend line. It's struggling to make it above it. It looks like this day right here, the previous trading day, looks like it wants to start breaking above that. And the 50-period moving average sloping into this gives me more conviction that, hey, this could be very well near a breakout. So how would you trade this? Well, you can enter in and speculate within this channel right here and have a stop loss under the 50-period moving average and then hope that the break takes place. Or you can be a momentum trader and buy when it breaks out and closes above this on high volume. So look for that high volume. You want the confirmation of high volume in order to know that this thing could continue to move higher. As far as when to sell it, well, just look at the point where it did get rejected previously. So 1020, 1025 right up here. That would make sense to maybe potentially come up here and get rejected or maybe move higher like that. Also, another spot is right around here. Looks like 950 could be a good area to risk mitigate, which means sell some of your shares. So for example, if you bought 100 shares right here, you had a stop loss and it broke out, you might want to sell 30 shares at this point, another 30 shares at this point, and then let the remainder 30 shares work in your favor, and then just kind of adjust your stop loss as time goes. Let's go ahead and move to the next one. Here's ticker symbol MARA. I like this one. It looks like we had this big breakout here on all this accumulated volume, boom to boom, and now it's been really pulling back. And this is why we call it the bouncy ball scan, is because if we get that bounce, it looks really good. And the pattern that I'm seeing right here, another falling wedge pattern. Now you could call it kind of just a down channel or a bull flag. You can draw it out a few different ways like that if you'd like. There's a couple different ways you can do it, not a big deal. But what we do like here is that the 50 period is above the 200. That's bullish context. We're getting pulled back quite significantly, and we kind of see its head poking up just a little bit. So this could be the start of a breakout to the upside. The volume is kind of picking up right here. We have the MACD kind of sloping up. This might be the starting point. It's still above zero, which is nice. And then the RSI indicator, it's not overbought, not oversold, not giving us much. But man, if this were to break out, we can really see this thing go up to this $5.25 level or $5 level right there. It might get hung up a little bit here at the $4, so you can mitigate some shares here, mitigate more up here, and then let the rest work in your favor. What I really like about this overall move and this pullback right here, it gives us a good opportunity to buy in for less of a price. And another thing is it broke out on high volume over here and has been consolidating on lower volume. So look for that volume uptick, and this could really send the stock a lot higher. Let's move on to the next one. Here's ticker symbol CDE. If you haven't noticed, a lot of the stocks that have been popping up on this scan are actually mining stocks and energy stocks. So it looks to me like the mining sector and the energy sector might be coming into play here in the next week or so. So this one, like I said, ticker symbol CDE. MACD, it's pretty bearish trend, but it is above zero. Typically, like most of the stocks that we've been seeing here, the RSI not giving us much, not overbought, not oversold. That's a good thing. And then the context, we had the golden cross over here, 50 sloping up nicely, 200's kind of going flat, and a nice spread means it's in bullish context. Bullish context is a good thing when you are playing on the long side of a trade. So what do we see going on as far as a pattern? Well, it's kind of a symmetrical triangle, if you want to call it that. You can draw it out a couple different ways. And really what we kind of see going on here that we want to see is a break to the upside, and then on high volume to see a continuation. Now, this does look like it's kind of getting toppy right here. So the pattern might continue within this trend for a little bit longer before breakout. So what you want to do is just really be patient here and see if you can get in at a lower cost. So what I would personally do, I would want to enter into shares probably right around $7.75 and $8. So if we get a pullback to there, and then I'd have a stop loss underneath that. If I get stopped out, I'd be looking for the 50 period moving average to continue to move and potentially enter back in around there. Or you can play the momentum. If we do get a breakout and it closes above there on high volume, that could very well send the stock higher and you could buy into that momentum. Let's go ahead and move to the next one. Here's ticker symbol APPS, and a couple things going on here. Bullish context. We have the 50 sloping up nicely, pretty far from the 200 period moving average, so we can't even see that on this chart, but it's in bullish context. We had a nice gap up here that was probably right around earnings. Actually, it was earnings, and we've been just seeing a continuation move to the upside, and now we're seeing a pullback. The pattern that I see taking place is a falling wedge. and it could be drawn out just like that, and it has its kind of head poking out right now. So this could very well be the start of a bigger move to the upside. So how would I play this? Well, first, nice volume coming in on this candle. What I would like to see is continuation to the upside out of the gate. So it looks like I said, its head's kind of poking out. What I would want to see is some more continuation and buy into the momentum, and then potentially just load off shares here around $29. The price right now is around $24. So you can enter in pretty much now, have a stop loss underneath this candle. The low of that candle was 22.46. So 22.39 would make sense to have a stop loss right there, because if you do see it continue to break down, it might head a little bit lower. So if it opens up at $28 when the next trading day is, I probably would just skip this stock. But if it does open up around this range, or right around here, I would say, yeah, that would make sense to get into and have a stop loss underneath this candle and just see if we get a continuation to the upside. Let's move to the next one. Here's ticker symbol KIRK, and wow, what a bloodbath this stock has been. However, look where it's pulling back to, the 50 period moving average. So we've had this steep decline right here to the 50 period moving average. Now the 200 is sloping up kind of sideways, but nice spread between the two moving averages right there. Bullish context. Bullish context is very important, like I said, for the long position. Overall pattern that I see taking place, well, it's a falling wedge. As you can see, it's kind of dipping pretty significantly far down, and its head's kind of trying to poke out. So how I would go about trading this is I want to see more continuation to the upside. So I would enter in right around here, and I would have a stop loss underneath the low of this particular candle. The low of this candle was $6.41, so I would say $6.35. As far as the target goes, I would be looking at $13 for a target. If it does break out of a falling wedge, it would be likely to see the price come back up to this area. However, from moving from $7.60 to $13, that's a very big move. So you want to make sure that you mitigate some shares along the way. And an area that I'd say would make sense to mitigate would be right around $9 and $10, that kind of zone right through there. All right, let's move to the next one. Here's ticker symbol RRC. And let me just kind of draw out the history of this. We've had run-ups and then consolidations, run-ups, and now we're seeing another consolidation take place. The pattern, once again, a falling wedge. The 200 period moving average is peeking its head out on the chart right there, clearly way above the 50 period. They're kind of going sideways, but it's in, once again, bullish context. The MACD above zero, but yet, it's still moving downwards, is consolidating, but it's still above zero, so that's a good thing. What I'd like to see, like previously stated, I'd like to see them start curving up like this and then potentially cross back over like so to create more bullish momentum. So how would I go about playing this trade? Well, a couple ways of doing that. One, you can speculate that the price is going to be breaking out by entering into shares around here, or you can wait for the price to break out, close above on high volume. You want the confirmation, and then play the momentum to the upside and have a target right around $9 would make sense. From $7 or $8 to $9, that's a dollar per share move right there. So nice gain. And then I would just mitigate some of the shares and see if we get even more of a continuation to the upside. Now, when I look at the history of this chart, this 750 and the 725 or the $7 range looks like it had some struggles previously right here. It acted as resistance, and then when it broke out, it really started moving higher. So if the price doesn't break out, you might see it continue to coil up to the $7 and then potentially make its move from that specific point. So keep an eye on this. I'd like to pick up shares a little bit lower and then speculate and then have a tighter stop loss below the 50 period moving average. That would make for a much better risk versus reward trade in my opinion. Let's go ahead and move to the last. Here's ticker symbol EGO for Eldorado Gold Corp, another mining company popping up on this scan. And what do we got going on again? Well, we have the trend that's kind of heading downwards, hard to break out of, and yet we have it coiling a little bit tighter. So a falling wedge, a little bit bigger than the other ones, but still nonetheless a falling wedge pattern. What do I like about this going on right now? Well, 50 period is above the 200, which we don't even see on the chart, sloping up nicely. Looks like the price tried to break down from it, but ultimately pulled itself back up to the upper portion of this trend line. The MACD is kind of looking like it might start curling back over right here. So that is a good sign. So what to watch out for? Well, a couple of things. Right now, I like where the stock is at right this moment in time. What I would like to do is pick up shares before the breakout and have a stop loss underneath the 50 period moving average. I do think that the 50 period moving average could act as a level of support. And if it gets me stopped out. If it does pull back and stop me out, I would then consider entering into shares lower, right around this $10.50 range, and then having a stop loss below this trend line. Another way to play it, because that's more of a speculation trade, you can wait for a breakout and get confirmation on high volume and then play into the momentum. As far as the target goes, 1250 looks like a good mitigation point, and then you have 1325 up here as well. So if you bought 100 shares, you would mitigate 30 there, another 30 there, and you let the remainder run for you. And you would constantly want to update your stop loss after each candle. You just want to put it just below the next candle, or maybe a moving average. If you like the 20 period, that's another way of doing it. That's all I have for you on this week's weekly scan. If you have any questions, comments, concerns, leave them in the comments section below. See you later.